Hello, everyone. I just wanted to talk to you guys for a few minutes tonight. One of the things I wanted to talk about is, well, let's talk about the Bitcoin price a little bit. You know, we've seen a bit of negative action in the market, and things have calmed down. We're looking at a price tonight of $10,167. Now, we had these big rises in price. Bitcoin went up to 13,800, all the way down from like what 3,500, 3,700, something like that. It went all the way up to 13,800. Now it's cooled back down a little bit, and this correction's taking a little while as it plays its way out. But don't listen to this talk of all these people that say Bitcoin's going to die and all this kind of stuff. It's far from dying. It's in this certain part of its growth phase right now, where it's growing and it's spreading. And what it does is, even when the price is going down like this, the base, Bitcoin's base out there, is steadily growing in the world. We got economic factors that are going to, very soon, are going to start to push Bitcoin up again in price. Now, today, we've had money coming out of the bond market. Money's getting very scared right now. Investors and stuff, they're getting frightened. They've seen the bond yield curve inversion. They know that that's a sure sign of a recession and an impending recession coming. Question now is when's the recession going to start? Some economists are saying 2021, some are saying 2020. Some are even saying 2019, but the United States economy is still perking along pretty good. We got consumer confidence is still fairly high, and we got manufacturing is off, but we've got I'm trying to think of the name of it offhand. Within the system, there's consumers, the consumer part of the economy. I'm trying to think of the name. I'm having a little bit of a brain fart, but there's a part of the economy that's still running fairly strong and hot within the United States. But most countries are already leaking toward a recession. They're working that way and working in that direction, We got Germany, really big. That's a huge economy. And the United Kingdom, another huge economy, both getting ready to go into recession. So what are they going to do with this money? Just had a lot of money pour out of the bond market, They're going to put it back in the bond market. They're looking for yield. They're looking for asset classes that are rising. Gold and silver caught a bid. Now what's happening is gold and silver are cooling off the last few days. Now, I predicted that on my other channel. In fact, I predicted the bottom of this correction of $17. I said would be the bottom, and I said gold probably won't go below $14.75. Seems like that's exactly where it's going. I'm close to the range in gold and silver, and I predicted when it was going to happen ahead of time. When silver was like $19.40 or whatever, and gold was like 1,525 or whatever, along in there. That's when I was predicting this correction. I predicted it right on a few days in advance. Same thing with Bitcoin here. I was just ahead. I predicted it just ahead on Bitcoin, just ahead of the correction in price, in this little downturn that we've had. And the markets right now are waiting for answers. And investors are watching other investors. Now, money just came out of the bond market. And these investors that just pulled money out, a lot of them are sitting in cash. They're watching other investors to see which way they're going to turn. If something starts to catch a bid, they're going to be all over it. They're like a bunch of hungry piranha, quite seriously, And this is the way. If cryptocurrencies start to catch a bid, we could see, because the investors are scared, we could see a massive pouring of money into the space. But we're going to see this anyway. It's just it might take longer if it doesn't catch a bid, If it goes bearish, the bearish sentiment leads to more bearish sentiment. And when something becomes bullish, then bullish sentiment leads. You have to understand how markets actually function. People don't tend to buy something when it's cheap. People always buy something when the price is up and rising. That's when they buy. I'm going to tell you, we could be facing a failure to deliver in the silver market. Could be actually coming up pretty soon. You know, because what they've done is they've used derivative products of the silver to expand the silver supply to make it seem like there's tons of silver out there, when in the real physical supply is very constrained, you know. And as the market heats up, going to be more investors coming in wanting to buy silver. You know, when the silver price was really cheap, down around $14, you could take your silver coins into a coin dealer, you know, and he wouldn't even want to give you a spot for them. And he was like, the coin dealers are like, I don't know. They're like not real hot on to buy it. They'll buy it, but maybe, but below spot, and they're not real anxious to get it, you know. A time's coming when you'll go in and they're gonna be drooling to have it. That's what's going to be happening, you know, and they're going to be paying premiums. Premiums are going to shoot through the roof on real physical silver when there's a failure to deliver. And that's what's coming in our future, is a failure to deliver, because there's very, very limited supply. So they control the supply, not the supply, but they control the price of gold and silver using derivatives products. In other words, paper contracts that are supposed to be cleared in physical, but they don't clear them in physical, they clear them in dollars, the paper contracts. If things get really in short supply for the physical metals, they will want to clear their contracts in physical metal, and that's where your failure to deliver will come in. Now, moving over to the cryptocurrency market, could we face a situation where Bitcoin has derivatives products written on it to underscore the price of the actual commodity? And not underscore it, but to control the price of the actual commodity. In other words, could the same thing actually happen with Bitcoin and the cryptocurrencies, where the price is actually controlled by a derivatives product? You know, I'm not going to say it's impossible that they couldn't do that, but I think that it's much harder to manipulate the price of Bitcoin to the downside using a derivatives product than it is physical metals. And there's a reason for this. Because take silver, for instance. You know, they can write all the derivatives products they want, and there's no real knowledge of exactly how much silver exists in the ground, in warehouses and whatnot. So it's kind of a sketchy sort of a thing. Some people say, oh, there's tons and tons of silver, so let's write tons and tons of derivatives. And they're off to the races, you know. Basically, that's the way it works, right? But with Bitcoin, we have precise numbers of how many Bitcoins are out there. So this doesn't give them the impetus to write unlimited derivatives contracts for Bitcoins that don't exist, to be covered in the derivatives contracts, if you understand what I'm saying. So it makes it harder, because the supply of Bitcoin is so well known, exactly how many Bitcoins there are out there. This would be a limiting factor to the amount of derivatives products that they could create. At least that's what I would think would happen. You know, it would be somewhat of a limiting factor. I mean, it'd be totally ridiculous to create 10,000 Bitcoin derivatives contracts for one Bitcoin, like they do with gold and silver. Well, of course, it doesn't go that far. I think with silver, it's something like 400 to 1. It's pretty bad, you know. But it'd be harder to do that. And they have to do that in order to control the price. They have to flood the market with derivatives product. Right? This is how they control the price to the downside. They flood the market with sometimes more derivatives. When it comes to silver, sometimes more derivatives product than the entire mining supply in a year is traded in one day. You know, and this is how they flood the market. But it's all crooked. It's all crooked, by the way. But I don't think that they can be so skillful at doing and so artful at doing this with cryptocurrency. And of course, we've been all waiting for a long time for them to approve exchange traded funds that'll be available to the general population. They've got exchange traded funds right now for Bitcoin, but it's only for select uh, people within the financial system, like banks and stuff. They're the only ones that can get in on it. It's exclusive. It's an exclusive club for the derivatives products for Bitcoin and the cryptocurrencies as of this point in time. So if only a fraction, only a tiny fraction of this money that just came out of the bond market were to go into Bitcoin, we see a tick up in the price, a big tick up in the price. And if that were to happen, if we right now in this point in time, right now we're in a very curious period right now, where the financial markets they don't feel stable, and they're wondering where they can put their money. If they see Bitcoin start to shoot up right now, this would be perfect timing. Then they would come underneath it, and it would lead to a mass buying. It could actually lead to a mass buying frenzy. While we're in this little bit of a bearish period where the sentiment in the market is not all that great right now. So to those people out there who are thinking about selling their cryptocurrency, I'd say just wait just a little bit. Wait just a little bit. HODL it a little bit longer, because I'm going to tell you what. I think that we could be seeing it take off pretty soon. Quite seriously, and we're in this little doldrums right now, but I can tell you right now, when the trouble really comes, Brexit is not going to go away, and this is going to cause huge problems to the financial system. Brexit. It's not far away. It's just over the horizon. Probably at the same time, we're going to start to get numbers in from the world economy, different GDP numbers and stuff like that. And they're going to be bad, really bad. We don't realize how big this slowdown really is until the numbers start to come in. When the numbers start to come in, the market's going to start to even get more frightened than it is right now. Money's going to start shifting around. I also, in the bond market right now, this little uptick we got, this little selling spree that we got of U.S. Treasuries, I predicted that days in advance. I was saying on my channel, hey, you know what? We could actually see a spring back in these treasuries that are going so low. We could actually see them bounce back. Suddenly, I said, and unexpectedly. And bang, here it is. They're bouncing back. I'm going to tell you one other thing before I go. One last thing is, watch the U.S. 10-year Treasury. If it goes over now I know we're quite a ways from 3.25% right now. But if it goes over 3.25% and stays up above 3.25% in a sustained fashion, we're going to get a market crash. And I've been predicting this for several years. And I'm still predicting it. And I'm sticking to my price target on Bitcoin right now. The end of the year, I think it's going to be at 16,000 or thereabouts. Come the end of this year, come past Christmas, around New Year's. And I think next year is going to be a great year for Bitcoin. I really do. But toward the end of the year, I think the bubble's going to burst again. So it's one way of looking at it, it's going to be the best performing asset class probably in the first half of 2000 2020 first part of 2020, best performing asset class. Second half of 2020, worst performing asset class. Because we go through this process. We've been through it over and over again with Bitcoin. It starts out at a real low price. It does what I call climbing the mountain. It goes all the way up and up and up and up and up and up and up. And we're in that uptick right now. It's just that what's happened is markets never go up in a straight line. We're in a little price correction in this mountain. We're climbing the mountain right now. This is why I'm predicting a $16,000 price target. We're climbing the mountain. But what we've done is we've come up to a little ledge, and we're sitting on the ledge waiting to go again, waiting to go up to the next leg up. which I believe is going to be 16,000, probably by the end of this year. And then we're going to probably take a little break again and go into another little ledge. And all during the first half of next year, I think it's going to be in this bullish trend, heading all the way up, and gosh knows where it's going to peak. But I can tell you one thing right now, I think it's going to peak substantially higher than the old higher, $20,000. Substantially higher. And then she's going to pop, just like she always does. But it never comes back down to the prices it was. You know, it like, if it started this mountain at, what was it, 3,600 or something like that, and say it climbs this mountain all the way up to like $45,000 or $60,000 or whatever it goes to. When it falls back, it's not going to fall back to 3,500. It's going to probably fall back to like 12,000 or something. You'll never see those real cheap prices again. That's the way it always works. And then what it'll do is it'll go along for a ways, and it'll start to heat up again, go into the next huge mountain, which will take it up even higher. It just keeps doing this until finally it's going to climb the last mountain. I don't know exactly how many more mountains it's going to climb, but when it climbs the last mountain, it's going to go up to an unbelievable high price, and it's not going to come back down. It's going to destroy the dollar at that point. It's going to be all over for the dollar. And all the money is going to move into Bitcoin and gold. And what I see coming is a world where Bitcoin and gold are interchangeable. Bitcoin's not priced in dollars anymore. I think that Bitcoin's going to be priced in gold, and gold's going to be priced in Bitcoin. And they're going to both serve together as a world reserve currency. And the dollar is going to be gone as world reserve currency. I think the handwriting's on the wall for this. But I think it's a little ways away yet. We're not there yet. We're not even close to there yet. The dollar is still the de facto world reserve currency at this point. And they're all out there talking about what's going to replace the dollar as the world reserve currency. Will it be the yuan? You know, I mean, the obvious is standing there. It's just like a little kid standing there waving his arms going, me. That's Bitcoin, right? And they're all talking about what's going to replace the dollar. It's the only game in town, they say. And what can replace it? Will the yuan replace it? And Bitcoin's over there in the corner going, me. But, you know, that's what's going to happen. I think eventually, in the end, they're going to see it. And by the time they see it, it's going to have snuck up on them. Thank you guys for listening, and catch you guys in the next show. Bye-bye.